All right. Back to work we go. Fantastic job today. Now we got CPI coming tomorrow, and the markets are grinding higher into the biggest news of the week tomorrow. We know we're going to get some volatility around CPI tomorrow. That's a given. But whenever we see markets grinding up like this, there's always one type of trade I always look for, and that's bear traps. Bear traps come in lots of shapes and sizes, and I've got a couple bear traps on my radar for tomorrow. I want to cover the entire strategy in tonight's video, entries, exits, some variations in case things get wild around the CPI report tomorrow. We're going to cover the entire roadmap in tonight's video. That way you have a game plan to make some money tomorrow as well. So charts look fantastic right now. Enough of the intro as always. Thank you so much for tuning in and watching my videos. Let's dive in now and make some more money on Wednesday morning. Get S&P SPY ready to go tonight. Nasdaq triple Qs are always ready. I've got 4 clues on the charts right now. They're telling me where the money is made tomorrow morning. The first of 4 clues, it's right here on the hourly time frame. I like to use the hourly chart as an overall directional filter, and right now it's easy to see the buyers are in full control on the S&P SPY, the Nasdaq, and the triple Qs. That's one of 4 big clues for tomorrow. That's our directional filter. Second clue is over on the calendar for tomorrow. Tomorrow's not your average Wednesday. There's 3 things on my mind for news tomorrow morning. First one is the CPI report. I'm sure you know this already. That will drive some volatility that we'll talk about a bit more later on in tonight's video. Also, too, don't forget, debt is a big theme right now. Ever since the big, beautiful bill came out of the House a few weeks ago, everyone's watching debt. Get a big 10-year note auction tomorrow at 1 o'clock Eastern time. I will say, though, that's not the biggest debt announcement of the week this week. We got the 20-year and the 30-year on Thursday afternoon. So tomorrow will be an interesting appetizer for the debt auctions here in the U.S. tomorrow afternoon. Those are 2 things on my mind for tomorrow. And of course, the final thing tomorrow is trade talks. We've been getting little bits and pieces coming out of London right now. We got the U.S. negotiators, the Chinese negotiators. Supposedly trade talks are going well. We've got India right now in the hopper, Japan in the hopper right now. So it smells like something's going to crack here soon. Hopefully there'll be some good headlines tomorrow morning regarding the U.S. China trade talks, but we're definitely keeping our eyes open right now on the news feeds right now from updates regarding trade talks. So 3 things: CPI, 8:30. That's the big news tomorrow morning. Tomorrow afternoon, though, don't be surprised if we see some fireworks around that 1 o'clock auction. What will be the next country now to ink some trade deals with the U.S.? What do you think? Let me know in the comments below who you think will be the next one to send that trade deal. Back to our charts, though, because it's good to know when the news is. We know the money is made on the charts. We've got 4 clues, right? So 1 clue is the higher time frame direction. Second clue was the news for tomorrow. I've got 3rd and 4th clues right now are over on the tick charts. Remember, guys, we don't trade time charts. We trade tick charts. Tick charts make entry timing so much easier. And by the way, that is a 7,000 tick chart, upper left-hand corner here on the S&P SPY. And in case you're watching for the first time right now, that moving average, that is the 21 EMA. It's the only indicator we need to find lots of consistent, repeatable, dependable, profitable trades here every morning in our trade room. There's 2 more important clues right now. I mentioned this one earlier. 3rd overall clue right now is we're slowly grinding, going higher. Now, anytime we see a grinding market like this, we now know that basically bear traps, getting in underneath prior swings, are likely where the money is made tomorrow. If we keep going higher, I'm going to keep looking on getting in underneath prior swings. Write this down. Anytime markets grind, they slowly grind right now, we know buyers are waiting underneath all of these prior swings. That's a very big clue for tomorrow. And the final clue for tomorrow is this range right there. Now, why would that range be important? Well, because ranges, they love to rotate. So once we pick up on that trading range, now we know the amount above, the amount below. Remember, ranges love to rotate with symmetry. The amount above, the amount below. We see lots of those, right? There's a range earlier today, the trade room, the amount below, the amount above. Very, very common to see range rotations with symmetry. This range could easily wind up swinging and breaking out. I've got 3 different trades I'm watching for as we go higher here. We'll talk about that a bit later on the video, because one of those trades is a fake out breakout off that high. If you like making money, you'll want to watch all the way to the end, because we'll talk about this price going higher here. My favorite trade though for tomorrow is I would love to go down below here and notice how that big channel off the highs, off that low, right underneath that prior swing. We know the money is made off the prior swings here. So again, we'll talk about it if we go higher here in a moment. My favorite trade for tomorrow though is let's run this thing lower, get below some prior swings. We know that's where the money is made in these types of grinding markets. I'm looking for a bear trap right now. As we pull back, bears once, higher high, bears twice. Why twice? Because now I know where stops are. Now I know where sellers are forced to buy their way out of their position, and now I can go in and buy a basic bear trap. Now remember, this range above us, it wants to rotate going higher. It wants to use a pendulum swing. The amount below, the amount above, right? So now after we get that nice juicy bear trap, we take our 1-to-1 target, stop moves up to point of entry, the same stuff I teach in the free video course. Now we look for separation. If I can get a shallow pullback away from that moving average, a higher high in price, this is where we start to add to our winners and ride that rotation going higher here. So again, get in underneath prior swings, bear trap, add on, and remember, let that sucker run. Use that pendulum swing to your advantage, and that will tell you now where that final target will be going higher here. Now, let's talk about some variations of this. For example, we may not get that bear trap down there. Every once in a while, we'll get that strong run down and just whoop, runs right back up again. If it pops up and begins to run going higher, I want to buy as low as I possibly can. I'm going to look now to make a small adjustment here. I'm looking for ways to get in now underneath that prior swing. If I'm lucky, we'll get we saw today. Trend line, channel, underneath prior swing. Very common when it bounces up like that. Notice how everybody comes in and buys under that prior swing. Under prior swings. Find that new channel off of that low. Same basic setup we saw this morning, late morning. So if all we get is a bounce hard off of that low, I'm not going to chase after it. I want to get in, again, underneath prior swings, try to buy as low as I can. Now, one more variation of this. Oftentimes what happens is we'll see a strong shot down, we'll get a bear trap down here. Nice, easy winner running back up towards that range, but we know that ranges, they love to break out pullback. And every once in a while, maybe about 40% of the time, we'll take our profit at the underbelly of that range, but we're not going to keep on rolling. It'll make another strong run down. We call these retest trades in our trade room. And here's the magic happens. Once we go back and retest that low right there, think about what's going on right now. Anybody who sells on that breakout pullback, where's their profit targets? It's back around that low. So sellers up here become buyers down here. You tell me, is that a good place to sell short? Of course not. It's the last place you want to sell short. Not an overall bull market that we saw on the hourly time frame. Bad spot to be a seller, great spot for a bear trap. Bring that 21 EMA down and do it again. Bears once, bears twice. Remember, always a higher high. I want their stops to get hit. Squeeze those stops. And remember, during a range like this, whenever you have a range above you, expect that rotation using symmetry, using pendulum swings, going higher. So as we go higher here, you keep on adding to that winner, separation off the moving average, higher high in price, and we keep adding on. We call these retest trades in our trade room. They pop up, they retest lower, bear trap, add on, and let that sucker run going higher. Now, speaking of going higher, I want to talk about a couple trades I have. If we go higher here, we're going to grab that in a moment on the Nasdaq. Before we do that though, let's slow down for a couple seconds because I know most folks watching right now, I know you guys know these patterns, you love these entry techniques, you're making money with these already. But if you're watching for the first time right now, this might be a brand new language, a brand new strategy. Don't you worry though, I teach this entire system, the entire strategy in my free video course. In fact, I have a ton of examples of bear traps, add-ons, retest trades. Guys, the markets are way too good right now not to be making consistent profits. So I'll put a link up top here for you, upper right-hand corner. Hit that link that popped up there and take that free trading course because the strategy I teach in that short video course will teach you a simple trick we use in our members trade room that literally tells me exactly where to find the winning trades each day. You're gonna laugh when you see how simple it is. More importantly though, I wanna teach you my 4 favorite entry setups so you can time better entries, make a lot more consistent profits, get your confidence back in your trading. Bottom line, guys, if you're still missing the best entries right now, if you've lost your confidence in your current strategy, pause the video, hit that link that popped up there, watch that free video course. You're gonna love all the trade examples I include in that short video series. The best part is it's completely free for you. Also keep in mind too, guys, I'm gonna put all the important links you'll need to learn the roadmap, join our trade room, time better entries, make a lot more consistent profits. Guys, most folks start making money all on their own, all from that free video course. So I'll drop the link for that video course down below this video, the description. And while you're down there, don't forget, I post a ton of charts and videos and mindset stuff on Twitter or X as they call it these days. If you're on the X platform, give me a follow. Again, all the details you'll need to learn the strategy and hopefully earn a lot more because of it are right below there tonight in the description of this video. So grab those and learn that if you're watching for the first time right now. Now you know where to go to learn more here. Let's now talk about going higher here. Now, one more thing though, almost forgot about this. What if we go, right? What if we end up going higher here and get kicked back going lower? Remember, as we go higher here, when I start seeing higher highs, underneath these prior swings are going to be a very, very big part of this. And we'll talk about this if we go higher here. We'll talk about some different variations of this as you go higher. But be very, very careful though with if we run higher overnight, be very careful though how it may run up and punch right back down again. Remember, the amount above, the amount below, that will give you, right? That will give you the level in which I want to use to now time the bear trap. The one thing though, very important, the one thing about this one is we're not buying very low, right? If I go lower now, I'm buying pretty low down there. But if I run up and pull back, if all I get is underneath this 60-30 area, but if all we see is a shallow pullback right now, remember, I don't want to buy high, I want to buy low. And if you're a student of mine, you know this already, but anytime we see shallow pullbacks, I now want to get in underneath that swing right there. So a shallow pullback, it's a small adjustment. If I run lower and trap these bears in, I can be relatively aggressive on this trade because I have the ability to take a small amount of risk for a much larger amount of reward. If all I get is a shallow pullback right now, I don't have the ability to risk small to earn large. And so because of that, I'm looking for something similar. It'll be a higher high in price, 1 try, 2 try, but I've got to get in underneath that swing because that's what will give me the ability now to risk small and earn large, comparably speaking. So shallow pullbacks, it's a small adjustment. You'll learn that entry technique. This is basically a technical bear trap like I teach in the free video course. So this is just some food for thought there on a shallow pullback. Now let's talk about if we go higher here, right? If we go higher here over on the Nasdaq right now. Now on the Nasdaq, first things first, we can easily see on the hourly time frame. Again, I don't like to get into the weeds on the hourly time frame. It's just the overall direction right now. We're definitely bullish. The faster time frame, those tick charts, that is what we'll use then to go out and time the entries. Before we dive into the tick charts though, if you're enjoying tonight's video, please help me grow this channel by hitting that like button and make sure you subscribe. I know we're all busy people these days. I appreciate you guys tuning in and watching my videos here on the YouTube channel. So thank you so much for all the support, all the likes, all the subs, all the ongoing comments in the comment section below. I appreciate you guys tuning in and watching tonight. Now for the chit chat here, let's dive in and talk about the Nasdaq on the tick charts here right now. On the tick charts right now, this is a 4,000 tick chart on the Nasdaq. Nasdaq is not as much volume as the S&P, so tick charts are going to be different. Slight adjustment here on the Nasdaq. We have what are called stacked ranges right now on the Nasdaq. Stacked ranges mean there's a range right there and there's a range right there. Now, why would that be important? Well, because the current range, right, the most recent range, this is the one that's going to want to rotate, right? And because we're bullish overall, this bullish range is more likely now to break out and run higher. And as I mentioned earlier, I've got 3 types of trades I'm watching if we do break out higher. More importantly, though, is the previous range. This previous range is begging for a breakout pullback, right? Previous range right there, we break out and pull back. Ranges love to break out, pull back. So if we understand those stacked ranges right now, one of my favorite trades on the Nasdaq, which is very similar to on the S&P, is I would love to see us with a fake out breakout overnight. I would love to go higher overnight and then kick right back like we saw like that, right? Go higher overnight, kick back, use the pendulum swing for my entry level, combine that with my range play, my breakout pullback, and again, we'll use that same bear trap technique. Bears once, bears twice, trap those bears in, and then where's the market want to go? It wants to rotate back up to the other side of that trading range. Again, I'll use that bear trap pattern. I'll go in and add more as we separate off that 21 EMA. Again, separation is the big clue for us in the morning trade room, higher high in price, and we're adding to that winner. Targets, of course, again, the amount below, the amount above. Leave that runner for that pendulum swing in a range-bound market. So be careful with, be aware of that fake out breakout. Be aware of that fake out breakout. Now, same thing applies in the Nasdaq as well, right? So below these prior swings right now, I would love to run lower. I would love to trap in those bears, use that bear trap and squeeze back up again. The exact same game plan I mentioned earlier on the S&P, right? It could be a V bottom, pops up, grinds going higher. We want to get in under prior swings, right? So same stuff we mentioned earlier on the S&P can be applied there to the Nasdaq. Also, too, if we do end up rolling higher here, remember, underneath that swing, right? Under that swing, run it lower, bear trap, and right back up again. Okay, now let's get serious now about what if we, again, we got some big news tomorrow morning. We have trade talks going on right now in London. This could easily turn into a very strong breakout. We got a lot of open space up overhead right now in both the S&P and the Nasdaq. Let's talk about 3 different types of breakout trades. A couple bear traps up here I'm looking for if we go higher. First one is a classic breakout pullback. So what I'm looking for on this one is if we start to break out and we start seeing separation off that moving average. Separation means the pullback doesn't pull back all the way to the moving average. That, for example, right there, that's the opposite of separation, right? No separation. Back there earlier this morning, right? If we see some separation, what that will do is set me up now for the first of a few trades on a breakout pullback, right? When I think breakout pullback, I think about a strong pop up that separates away from that moving average. A lot of examples of separation in the free video course. The pullback is too shallow, right? Separation. That will give us our initial entry. And then remember, anytime we see a range breakout, the breakout leg is the measuring leg. So once we know how big the breakout leg is, then we can pin it down around that low, and that will give us our target up overhead. So step one of a breakout pullback is to look for that pop up, that separation. We're getting in below the prior swing, and we're using a measured move for the target going higher. Once that's done now we don't buy high anymore. We now look left. We find these prior highs. What was resistance now becomes support. And we now look for what's basically a two-legged pullback. One leg, two leg. Think about a measured move. A, B, C, D. And between you and me and YouTube, the best ones go a bit more than a measured move. 110, 120, 130%, right? Measured moves are symmetry, right? 100%. Go a bit more than that measured move. It's even better if it goes a bit more than that measured move. At this point now, trap those bears in. Bears once, bears twice. All of that momentum now wants to go back up and retest the high. This is not a good place to be selling. We're going to use that range for a breakout pullback. It's a bear trap. Get separation off that moving average. It's an add-on. I'm telling you right now, once you learn this system, you're going to start seeing these bear traps and add-ons everywhere, right? Bear trap, add-on. They're everywhere on all time frames. So one of three breakout trades going higher here is a breakout pullback. It separates off that moving average. That's the clue. It's a valid breakout. We then get our measured move, two-legged pullback, bear trap, add-on, back up to retest that high. A second breakout going higher is basically a continuation of this grinding move. If we start grinding higher right now, we keep grinding higher right now, all I'll do is find a trend line off the highs, bring that trend line down around these major lows. Remember, look left, find prior swings, and the goal is I like to get in around the low of that channel, right around. I'm always watching for where can I tie together a prior swing low with the low of that channel. That's the sweet spot. Below a prior swing, around the low of that channel, get underneath that 21 EMA, bear trap once, twice, squeeze those stops. And again, as always, keep on adding to your winner if you get that separation after that bear trap going higher there. Love that one, right? Love that one. Kind of a pop and grind breakout going higher. It'll pop up, begin to grind going higher. Basically, it'll continue grinding higher here, and we'll use that new channel to time the entry, bear trap, add on off of that low. The third and final breakout going higher is one of my all-time favorites. It's a breakout into a trading range, right? Breakout higher. Let's say now we break out going higher here, and we go into another trading range. Now again, stacked ranges are very, very cool because now the previous range can be used as a breakout pullback, bears once, bears twice, trap the bears in, and then the current range, the newest range, the most recent range, now we use that for our rotation. This is why I love stacked ranges. So if we do get lucky and go higher into a range up here, I'm going to use the previous range for the breakout pullback, bear trap. And again, I don't mean to be repetitive here, but that's what trading is, right? Trading is repetition over and over again. We look for the same basic entries. You will too. Once you learn what works, once you start making money consistent with what works, you will not change a single thing. We don't do that. We don't change anything in our trade room, right? So bear trap, add on, and again, we know exactly now where that range rotation is going to want to go, going higher. So third trade here as we go higher right now into a stacked range. Keep finding those bear traps below those ranges. Keep adding to your winner and keep using those pendulum swings for targets, because I know most of you guys know this already. They work so well for entries and for exits in these range rotations. All right, guys, that's the game plan for tomorrow. Now, speaking of tomorrow, the place to be is in my trade room, 8 o'clock Eastern time. Guys, I can't think of any better way to learn to do this, start making consistent, repeatable money, then come learn and trade along every morning at the opening bell. I'm going to put all the important links you need to get started. Start first with the free video course, learn the basic roadmap, start making money on your own, enjoy all those trade examples I include in the free video course, then come join me in the morning trade room, 8 o'clock Eastern time each morning, and we'll do it together. In the meantime, guys, hope you learned a bunch this afternoon. Hope you use this knowledge to earn a bunch tomorrow morning. Be well out there. Be nice to each other, will ya? And you better be here next time. Adios, amigos. Bye for now.